Mic check. Mic check. 1 2 1 2. What's going on, everyone? This is Jordan with Conquer the Markets. Getting ready here for our live stream. I think it's going to be the stream of the week, and what a wild week it has been. I hope you're ready for this one. It's going to be a strong session. We have a lot to discuss, and it's going to open up the doors for further discussion. Looking at a chart here of Bitcoin, is this bullish or bearish? How do you view this? Bullish or bearish? I would like some of your thoughts. I mean, we are in a strong downtrend over here, and price over here, you can see, is kicking up off the lows, has some momentum to it. There's a lot of similarities to past cycles, and thus far, everything continues to really rhyme. Could this time be different? We looked at that yesterday. We looked at that in depth yesterday. We're going to continue forward over here. Bitcoin indeed is pulling back. If you remember what's happened over the last 5 weeks or so, you started hearing people talking about, let's say, alt season has begun. You started seeing people getting really, well, it was all transparent inside things like Pepe and the meme play. And people right now are wondering what is the next potential meme play. Whether or not that was any type of local top or not, I don't think that it is necessarily connected to what is the flavor of the day or week or where are people getting wrecked. I think it has a lot more to do with the macro. It has a lot more to do with following things like global liquidity. It also has a lot to do with what's going on in the United States with this whole debt ceiling debacle. It looks like it's rolling over, maybe and potentially. We know that we have some levels down over here where important tests and holds could come in. As far as where positioned on the daily time frame, neutral on the sidelines, just about as close to entering on the long side and on the short side. What a massive position of strength. That's after on the daily taking 2 trades here during 2023. Massive gains on the upside. On the 8-hour time frame, we are also neutral. Still a little closer to entering here on the upside, but it's getting more closer to where we're at an equilibrium, where we're getting ready to attack either the upside or the downside. I don't know. I think that if you showed a lot of people this chart and did not show them that it was Bitcoin, I think that a lot more people would be bearish on this chart. Nevertheless, let's continue following what's happening. Let's jump in over here. I had to go ahead and set this reminder. This is going to be a very important session. So what I'm going to do is try to copy this so I could come back to it and come back to those notes. Before we go any further, a couple of things to point out: that we are looking at the dollar, the DXY, breaking out over here of this descending wedge that we talked about. And we're having some follow through right now. It's happening, I think, ahead of any type of resolution of the debt ceiling debacle. We saw that if you're following it from afar, like I'm following it from afar, you saw that meetings that were supposed to happen were put off. The market here might be saying to itself that, you know what, they are actually getting closer to some type of resolution. I don't know what the market's reaction is going to be. The last time that we saw the debt ceiling debacle take place, 2013, upon the resolution, the dollar firmed up and began trending. I mean, I don't know whether that's going to happen or not, but I know that we are constantly on the right side and getting ourselves back on the right side over here. A lot of people, I think, are caught a little like deer in headlights right now. We're going to make sure we're not one of them. As we're seeing that occur, as the dollar's firming up a little here, thus far, the current pullback on Bitcoin is currently underway, as well as the rest of crypto and even the equity markets today. Yields are up. I think there's a strong chance, this is not really what this session's about, but likely Mondays will be, that the debt ceiling debacle really comes to some type of resolution once we start seeing a game of chicken being played and we see markets come under pressure, because it looks like both sides, once again, are really not interested in doing what perhaps is best for we the people, but playing games. There's not going to be any type of pressure for anyone to make any type of concessions until the market is screaming that it is not happy. We could be at the beginning stages of that happening right now. Let's look at Bitcoin. Let's go ahead and look at the Bitcoin. And there you go. We're on the same page over there and see what's happening. And we've been following this and we've been watching first for any type of upside resumption above this trend line. We're going to take a close look at this trend line and we're going to bring it down into the market and see where it might offer us now a place to go ahead and place a stop loss. This is discretionary trading. This is discretionary trading. And what we're looking at over here was this pendant that was forming. Here's the lower trend line. We broke down over here. It was a wick down and we closed back up neutral, right? Since then, yesterday, we closed down below it. We had that little bit of awareness in yesterday's session that we were looking at. That's sorry, Yamato. I felt like you're screaming at me with all the caps. I get a little bit like, whoa, what's going on? Did I miss something? No. It is. I mean, that's not a bear flag. Is as we all know, it looks like this, right? Bear flag goes up. You might say that this is, bear flag, bear flag, bear flag. Is this a giant bear flag? It's probably more a channel at this point. But no, that would be more reminiscent of a bull flag that broke down, right? You could say that was a bull flag. A bull flag slopes slightly down, and a bear flag slopes slightly up. But we're not really interested in that. We're interested in continue to stay on the right side over here. And we saw that we were forming in this channel, right? And then we had the red line over there for that breakdown. We've broken down below it. Brother, you're yelling again with all caps. If you could please stop that, I'd be much appreciated. We're going to go ahead and take this line down over here. And I just want to come off the top of that peak over here. Let me come down to a smaller time frame so we could get a better look at it. And you can see the resistance that was forming over here. I'm sorry, support over here. All right, brother. There we go. And then we got sorry about that and the distraction. And look, we work together as a community. We don't. That's a massive distraction. What's that all about, my friend? Come on, that's not cool. I'm not happy about that. We have a very important session over here. We're looking to make sure that we get to stay ahead of what's going on to unpack this together. We look, and it's one of the most important things about what we do together is working together as a community. And the community that we have fostered is really positive. And we try to include everyone and bring everyone with us and work together in such a way that you don't see that across the internet anywhere else. I do believe that it has led to what we have achieved. Because whether or not you're talking about in a corporate fashion, you're talking about in an online community or anything like that, when negativity enters the equation, when emotion, it's distracting. It's not conducive of what we're trying to retrieve. And what we're trying to achieve here is to help everyone be able to do something that very few in the world could do: conquer the markets. We need you working with us, Yamato. We need you working on our side and contributing to the team. You are important to us, but it's got to be in such a way that is conducive to the overall group as a whole. All right. So let's jump back over here. And now that is back into the you know what? Here we go. Boom, boom. Jordan, back in the room. You know what's so funny when we used to do this, like on the public, and we'd have like, you know, a bunch of people in the room. And if you were to do something like that, like refer to yourself in the third person, the amount of outrage that would occur, people get distracted. You could see that I got distracted here this morning. I start this off and I'm like, this is one of the most important sessions, perhaps the most important session of the week. And then I got sidetracked and distracted, and I'm human, and I'm pointing that out to myself right now so that I could do better to learn from that experience going forward. Now, I don't want to take the comments off. I really get a lot of value from the comments and the interaction during the live streams. If I were to go ahead and just focus in, or I thrive off the live environment. All right. Boom, ba boom, ba boom, ba boom. Yeah. No. Yamato is part of the team. Yamato's inside CTM, inside the Discord. We'll go ahead and get that straightened out. But to move forward here in this session, we're all good. But thanks for looking out, Wrestle Jam, and I saw that as well. All right. Yeah, kind of sore. If you see on the Twitter, if you jump on the Twitter and you check out my profile, we sent out, or I posted yesterday afternoon a tweet looking at Ethereum Bitcoin lacrosse, and it pointed out to a particular trend line when Ethereum broke out to the upside of that. That is likely when alt season will be apparent. Now there are other things that obviously would encompass alt season, and that's in the most simplistic terms, but I bet it's dead on. All right, Jeff, that's right. Back to Signal over here. And let me jump in. And what I'm doing is I'm taking this trend line from the top that was over here, that we had over here, and I'm placing it down for where a stop loss could be if someone took this trade over here, the entry on the breakdown. Now, if you're trading this on the daily time frame and you were looking for a break of this pendant that we've been watching, I'm highlighting that line right now for when that breakdown would occur. We saw that wick down. I think that we stayed on the side of that in real time, and most people would have, and we wicked back up to neutral. And then at that point, we added in what this little channel that was developing, and then you saw the breakdown occur. For me, the entry's all the way down over here. I wonder if you were really looking at a small time frame, if you were, if you took the entry over here, is that possible? I think so. I think it's a much better entry. If you were watching that in real time and you saw price kind of gap up over here, would you then, on the breakdown of this trend line over here, the bottom support of the pendant, would that also have been a potential place for you to get back into the market? Maybe, but the way that I was doing it here with you was below this red line. That was the entry that I'm looking at over here, and it's really it's far away from what an ideal entry would be for me, but we're looking at 26,700 and change. So stop loss for that, I think, is above this sloping down trend line over here that came into the wick. That is currently around 28,000. Let's call it 200. So roughly $2,000. That's the way I see it. If you go ahead and you move this down further, is that an area that we could find potential support? I don't think so. I'm going to leave it at that and just use that for a stop loss. I'm going to go ahead and just clone that and just go ahead and jump that over here. By the way, as we're speaking about discretionary trading, most of and the majority of our effort for over a year now has simply been into the collective mechanical edge that we implore. I think there's a lot to be learned from this. I have this pulled up over here today, and that is simply as a reminder of the immense discretionary work that we have done. And I think that as time allows going forward, I'd like to circle back to that and see if we could refine that further. So just jumping back over here, we are looking at what is a breakdown occurring of Bitcoin. Target first area is 25,200. That's a place, if price were to reach over into that area, it's time to go ahead and do two things: take some of that profit off. And this is, by the way, we're in an uptrend. This is a way counter trend trade. We are neutral when we're looking at our positioning on CTM 2.0 on Bitcoin. Here's Bitcoin. I just want to stress that, like, we are completely neutral out of the market, and it's been 6 days now that we've been out of the market. It's not often appreciated what an edge it is to know when to be out of the market. As for example, you take this trade over here, and usually as you take a trade, you're hoping that that individual trade is the trade, or one that goes on to not only produce profits but really produces better than expected profits. And I think that it's often underestimated how important it is knowing to get out of the trade, to cut your losses short, because that right there, and then getting on the sideline, in retrospect now, you could see how important that is. Very relevant. I just wanted to go ahead and circle back and point out this is a counter trend trade. Now, it could be the top. It could be something that turns into not only a bit of a correction and 15% off the high in Bitcoin in a bull market is nothing but noise. Nothing but noise. And not only is that to be expected, but 20, 25, 30% drawdowns are the norm and expected, and will happen often throughout the cycle. Now, I don't think that necessarily we're in a bull market. I know that we were very early calling the bull market breakout. The first one was done mid-December, talking about expectations and predictions for a bull market breakout. That trade then back on the right side. Same thing here with the dollar. We're following what is now a buy impulse triggering and making sure we stay on the right side. Some people might be like, well, wait till what happens by the end of June. Okay, either which way, just as like up here when people did not want to talk about it, people were there like, what could change in the macro that would cause the dollar to come off? We're going to at least 120. And, that's not the way that we do it. We were able to take the second sell impulse. First one came off over here. This one was faded. And then the second one occurred over here. And that's staying on the right side, right? That was a massive move down. We were able to ride the whole way. And then we had a buy impulse back on the right side until the next sell impulse. This one over here got a little jumbled down over here for me, right? Didn't and look at that. Price is consolidating also. So you can't always trade with perfection. Do not try to be a perfectionist, but always do try to keep improving. And what we're looking at then, and since is able to go ahead, and I said, okay, well, let me just back up. And if we have a breakdown of this area, then I'll be looking to reestablish a short, as that should be igniting the next leg down. And then very good, not taking this buy impulse. You see that trend line over here, but going ahead and giving it room above. And finally over here and we're able to situate ourselves and find out when this was triggering this descending wedge. And that's on the right side. And I don't know whether or not this rolls over. And if it rolls over and takes out this area of support, we will be on the right side. Cutting your losses short is exactly what you want to do. Or if this thing winds up actually coming up to test the top of this resistance over here, that could be above 105, 106 in the 106 area. That's a big move to be on the wrong side, in my opinion. And you never know. I don't know that it won't break out. I don't know what's going to happen. It's rather staying on the right side of the market. And that same premise over here. Like, I don't know. We took a breakdown over here. You remember this was the first breakdown, counter trend trade, and that discretionary, and then got neutral. Since getting neutral, out over here hanging out neutral, and now we have a new short entry. Imagine how many people have forced trades over this last week on both sides. Was there anything to trade? Oftentimes, trading less is trading a lot more. So expectations on this counter trend trade is the next bit of support. This was resistance. It's very important resistance in so much that it was the spike to the lunar low. Then it was where the rally from the 3 arrows and Celsius rallied into upon their collapse. It formed resistance here once, and then on the second attempt, slightly, and then broke above. We want to see this hold. If this hold, and this is nothing more than, a 15, 18% pullback, and Bitcoin is able to turn and flip this broken resistance into support and then resume up, this is going to be a really good sign. And likely then, if we're able to we're going to have a lot more momentum over here. A lot more people, if we're able to flip and hold above this level, are going to become bullish on Bitcoin. And you're going to see what has a better odds of any type of rally into the summer taking place. So we want to see this level hold over here. Take some small profit on the counter trend trade, move your stop loss to break even. Don't forget, this is counter trend trade. Why it could roll over and become something bigger, odds are that it's still going to push to the upside. Now, if this breaks over here, 25,200, we have to start talking about it now that we've broken down outside of this pendant, and that pendant turned into confirming through the channel, or that channel you could say is potentially was a bull flag. It has the shape of a bull flag, slightly downward sloping. Either which way, if that breaks and we lose that, we were looking at yesterday some tighter levels over here. I have this trend line. You could see this is coming off of the January low and the banking crisis low. I pushed it above and I saw that it really was also continuing to show the structure of the market. So I believe that there's a good chance that we could find support up into this area. We looked at it from a different couple of angles yesterday, and there's like light support in this area. If 25,200, 25,000 doesn't hold, that's the next area targeting, and I would like to see that hold. If that were not to hold, then I have to now, as we're breaking down, give you out levels in advance. That way, as we get closer to potentially taking them out, you're aware and ready for them. If we were to take out this level, at that point, the green line below comes into play. That would still, for a bull market in Bitcoin, 35%, be well within reason. And if that line were to hold, it would be like a lot of people right now, as Bitcoin is trading at 26,000, are saying, I hope we get a pullback to 25,000. Okay. A lot of people will be buying. We want to see bulls defend. If bulls are unable to defend and price goes down lower, a lot of people will saying, well, I hope we go down to 22,000, 20,000. As we get there, the tune is going to change and Bitcoin will be 30, 35% off the high. And bears, those that have been, perma bears, even through this 100% move up off the low, they will begin getting emotional. They will be getting like, oh, I was right all along. You're just as wrong as can be, right? If you short something and it goes down to zero, you made 100% gain. Well, this is a 100% gain on the upside. I don't know how you missed that. There's much more potential on the upside. Either which way, what I'm getting at over here is a lot of people right now who are very ultra bullish on Bitcoin right now, as we got down over here, they would be second guessing themselves. There's no question about that. If that were to break, I would say that the bull market breakout has been invalidated. That brings in not only a test of the previous cycle ceiling, 17,250, but also the lows over here. So that's what we need to be thinking about. You know what, Andy? In the last cycle, we're going to be talking a lot about that in this episode here today. In the last cycle, and pull up the balance sheet, right? You could say that when the Fed paused in 2018, right over here, I have the balance sheet pulled up for today's discussion. Let me pull up the Fed funds really quick and just put it into a new price scale. Hold on one second. Andy, over here in 2018, December, this is when the Fed has the last rate hike, and then they paused rate hikes in this area over here. And Bitcoin ran up hard. Expectations are when that happens again, when the Fed moves towards a pause, it's going to be really bullish for risk assets. Except the Fed is not paused, and risk has been rallying. So right away, you could just say, well, that is different than last time. That's not to say upon a pause of rate hikes that risk does not rally, but it is an important inflection point where we need to really be looking at the markets and see upon such an important juncture of the cycle what the market's reaction is. Because we could go back to last cycle, and when the Fed paused, risk rallied, but they didn't rally until the pause. This time they've been rallying before the pause. So something's not the same, something's different, and you have to go ahead and just, there's a lot that's different. Let's just leave it at that for now. So that's a good, I think, discretionary view of what's going on and preparation for what this could turn into in advance. All right. I see that. Anyway, let me just keep going. Yesterday's session was really well received, especially by those within CTM. I didn't just enjoy the session. I loved it. Really appreciate how you put the macro together with the market and Bitcoin in particular. I'm taking every single signal on CTM 2.0, but of course, I'm not always as easy with it. That's just me. I have to learn patience. Like right now, being on the sidelines, Bitcoin on the daily, I really want to see it drop, but I will follow it either way. And then we have over here, this is beautiful. Great session, Jordan. I love it when we have regulars who are really picking up on the session that is shared. Macro does not yet align with Bitcoin for the bull of all bulls to run hard. Great session, Jordan. We all need these fireside talks. The analysis is great. I'm always thankful for thoughts regarding all the discussions in CTM, keeping this community stronger on the right side. Priceless, brother. My exact thoughts. And that was really, really awesome for me to hear that it was so well received. And it brought up probably one of the most important questions. This question over here by Wes. And Wes is saying, listening to today's live stream, if it becomes recognized that Bitcoin responds to liquidity, wouldn't you expect its price to front run expected liquidity? And this question is so timely, is so important, and deserves so much discussion. And I would like to begin that discussion today and really begin to get into it. And it's something that I've been spending a lot of time thinking about as the current cycle continues to evolve. We're getting close, if we haven't already seen, the last hike of this tightening cycle. Now that's variable. We just saw the Bank of England go from was it the Bank of England or Bank of Australia? Someone could let me know in the comments. That just went from a pause and then back to raising rates. And we're seeing a report this morning from the White House that why they have been draining the Strategic Petroleum Reserve these last 6 weeks since OPEC went ahead and cut production. The initial reaction by crude was to jump on that. And then, the U.S. started draining their petroleum reserves even further the last 6 weeks, not only counteracting that, obviously putting pressure on the market. We've also seen things like the expectations of China opening up was going to be really smooth. That's not really working out that way. So there's lesser demand for that. Oil also reflecting, which is why the production cuts also happened. A weaker or slower demand out there for oil right now, as we are seeing growth begin to wane. Now, it is possible when the U.S. begins refilling it that all of a sudden there's more demand in a very tight market. You see price of oil start rising. If that were to happen and we started to see inflation rise again, that is something that could cause the Fed to move from a pause into hiking again. It would not be unusual to see the Fed move from a pause, and that doesn't necessarily mean the next move is going to be rate cuts. It could be back to hiking. It would not be unprecedented or anything like that whatsoever. Bank of England. All right. Fabio, much love and thank you for that. I appreciate that very much. We're watching, and yesterday we were talking about, a lot of people were talking about, as liquidity was rising, you have to follow the liquidity. We were pointing out, and we pointed out right over here, we have the video, The Coming Liquidity Crunch, pointing out the reasons. After that, people like Lynn Alden were able to talk about the double whammy tightening that was coming in following that same concept. Not that she watched CTM. I don't have any type of relationship with her whatsoever, but I'm just saying, seeing that confluence of thought out there and opinion. And we're seeing right now liquidity going the other way. And you're seeing the price of Bitcoin following it, which is why the question from Wes comes up, right? And it's a great question. And it's going to take a little bit of, let's say, I want to see if I could bring that into it. There we go. I just want to keep these notes down over here. Let me read them to you first. That way, as I go on to explain all of this, it'll be at the forefront of your mind. This is going to turn into a little bit of a thicker session over here, but probably the most important conversation that we're moving into. I believe this is really the essence of what's taking place in the markets, and I don't think enough people out there are paying attention to it. Does a liquidity credit crunch occur before the expansion of liquidity again? Or does liquidity get injected before a credit crunch? Bitcoin has front run this in both directions in the past. I think it's a possible scenario somewhere between 2007 and 2008 and 2020. So I'm going to look at both of those with you. One of the drawn out and other rapid. This is amazing. I love this. Let me take a moment to get rec in park. Are you moon boys buying this dip or what? I can't even. I'm so sorry. I can't even. I mean, this is just the best. And this is awesome because I love being out there and I love knowing who I'm competing against. Yeah. And that's awesome. I feel like we're going to take your money. We're going to take your money. All right. See ya. All right. So I think of a possible scenario sometime between 2007 and 2020 could take place. One was drawn out and the other rapid. In each, Bitcoin under pressure until quantitative easing happened. So there was no front running of the liquidity. Bitcoin was actually following the liquidity very closely. We're gonna get into that. The other side, and this is another option that could happen. What makes it so difficult is that we can see injections happen as we did with that balance sheet expansion in 2019. We might not run into a crash, and out of the crash, whether it's slow or fast, all of a sudden an injection of liquidity. The Fed's hands are tied because as soon as they start injecting liquidity, inflation is going to be running rampant again. Let's start off over here and just look at a couple of things. A lot of people right now, again, are saying, oh, you got to follow the liquidity. The liquidity is going up. We started talking about which way we expected liquidity to go from there, and it's going down now. And so we're seeing Bitcoin also beginning to follow that as well. Now, this is not the best way to, let's say, we're talking about here, the question I'm trying to talk about is whether or not Bitcoin's price front runs liquidity, or as Wes is surmising, that will smart money in the future front run this even quicker. So Bitcoin actually front runs liquidity a lot better than liquidity itself. What do I mean by that? Let me go ahead and show you. This is where Bitcoin topped in November and came off 40%, 45%. Liquidity, global liquidity did not top until March when the Fed began raising rates. That's a 45% move on Bitcoin down before global liquidity peaked. So when people tell you to follow the liquidity, I think there's a lot more to it. And you have to go ahead and have a better appreciation for that. That's not the first time that happened. If you come back and you look at, the top of 2018 over here when Bitcoin topped in December 2017, Bitcoin came off again, 60% this time. And again, it was 3 months before global liquidity topped. So I don't think following global liquidity is the best way to go about it, especially when let me go further than that. What I do think is the best way to go about it though, and I've talked about this, is monetary base total M1. And you could see once that topped over here, this is in Bitcoin in orange, and this is monetary base total in blue or light blue. That peak happened at the same exact time. It was very similar in the top of 2018. You could see that this is where all M1 pulls back, and that's the top. And it's complicated. I'm just pointing out that I don't think global liquidity, as a lot of people on the way up were pointing out, is a good thing to follow for what's going to happen with Bitcoin. I think it's a lot more nuanced than that. And that's enough to be said for that right now. Let's go ahead and talk about this though, right? Remember this tweet over here? I remember it. This is when the Fed announced in the meeting minutes, October 16th, 2021, that they were going to be tapering down asset purchases, their QE. And the reaction out there was, you cannot taper a Ponzi. Right? We said, looking at the macro, it appears that the Fed's coming policy mistake in 2022 is going to lead to turbulent and disorderly markets from a rate shock. Bitcoin is extremely vulnerable, not immune to this. The taper in December 2021 will confirm the Fed's attention. 2022, trouble ahead for Bitcoin. And you could see that was exactly spot on. Now, let's go ahead and look at it from the vantage point of the balance sheet, right? This is if we were to go ahead and add, let's say, global liquidity, and ACE is saying, I personally don't see a very large correlation between the two. And I have to agree with that. I mean, not when you're dealing with, let's say, the precision that we are, but what about the balance sheet, ACE? Let's take a look at the balance sheet and see what that offers, in so much as we could go back into 2018, and this is when we started seeing balance sheet runoff begin. Now, it's a lot more nuanced than just the balance sheet, because as pointed out earlier, we had to talk about what was going on with the rate hikes. And it's very important to point out, Bitcoin bottomed, equities bottomed, not when quantitative tightening stopped, because quantitative tightening ran for another 6 months over here, 9 months over here, till September. But the rate hikes stopped. And upon the rate hikes, that's where we saw Bitcoin bottom and go up. And that's very important to point out, because that's what happened. It's not the same here, because rates are rising over here, and Bitcoin has already put in a bottom thus far. Now, I want to look at this in relation to the cycle, the tightening cycle, and the balance sheet, and what's going on with the balance sheet with Bitcoin over here. And you can see from this area over here where balance sheet reduction begins, right, until over here in this area, Bitcoin is under massive pressure, and Bitcoin continues then obviously to have this massive Forex rally over here. We saw in this area something break and balance sheet expansion started, but this is the area I want to focus in on. This is the liquidity event. This is the deflationary event that occurred during the global lockdowns. So something broke over here, but when something broke, it did not mean that like it was a deflationary event. Something broke right over here. This was the US banking crisis. You saw the immediate response was balance sheet expansion. That's not inflationary though, right? Because that money was given out to the banks. That money was not given directly out to the consumer and or businesses, as we saw during the 2020, 2021 era. So what happens if you say from this area over here, as all of a sudden something changes, and we saw something changing being the Fed says they're going to taper, and not only taper, they're going to move towards raising rates and quantitative tightening. Okay. So during this period, we're seeing price come off. That's similar to this period over here. And then the event is over here. Okay. Now, I know that there was a massive tradable event that occurred throughout this period. So instead of thinking in the lens that we normally think of, and we are short-term traders in so much as that we spend a lot of time on the 8-hour time frame, right? Or even the daily time frame, and we're able to go in both directions. Even the daily time frame, which is obviously um, offers a lot more, let's say, opportunity than the daily is sitting back. You could see that we're able to go both sides on the daily, right? During different types of momentum shifts. And I do believe that we could have different momentum shifts between now, as started occurring over here. You saw the daily time frame picking that up, and from when there would be some type of deflationary event. Now, if there's some type of deflationary event, some type of credit crunch, and that could happen from, even the debt ceiling, like we could see a game of chicken turn into an accident. It's the markets. You never know what's going to happen. All right. So, what happens if right now you're talking about front running the liquidity? So when we talk about front loan liquidity, I'm talking about like a massive injection of liquidity into the market and this. So if you're front running the next liquidity ejection, when's that going to happen? And no one really knows. A lot of people did expect that in the second quarter of 2022 for something to break and then QE to start again, and that was wrong, and it's the same thing now. Like, what the Fed is looking to do is continue to put out band-aids if need be. It seems like the greatest stress is coming from the regional banks inside the United States. It could be that. We saw almost, the Bank of Japan blowing up earlier in 2022. Since then, it looks like that pressure has come off. We saw for a second a scare in the bond market out of England. And then like they were able to go ahead and put a band-aid on that. And you don't know where the next crack is going to come, and likely where people think it's going to come from, it's not. And right now people think it's going to come from the commercial loans for real estate inside the US regional banking system, and the general knowledge of the average investor and the professional investor continues to greatly increase, and I expect that to continue. So maybe that's correct, and maybe that's where actually things blow up. And as things blow up, you're going to see the Fed, be there to backstop what it needs to be. But I don't think that they're looking for any type of massive expansion of the balance sheet that we saw over here, that we saw in 2008, unless they have no choice. If they have no choice, Powell's been very clear that they feel very confident at any point in time they could just flood the system. So what they're trying to do is to more or less engineer a slowdown, and they're trying to do that over the longest period of time as possible. In yesterday's episode, we talked about people or looking for Bitcoin to do Bitcoin things maybe a little bit too soon, right? So this is the type of event that people are trying to front run, the next liquidity injection. Now, before we get to that next liquidity injection, we might run into some type of liquidity crunch, and that causes a credit crunch. And if that's happening, Bitcoin will not be immune. You will see everything correlated down. Trying to time that is extraordinarily difficult. You don't know whether or not the low is in over here and this is the low, or that this is going to be retested and or taken out. So, Wes, I think it's probably the most important question asked, right? Is money going to become smart enough to go ahead and front run the direction that liquidity is going? Bitcoin tracks liquidity, but which way is liquidity going from here, right? And right now it's going down, and not only is it going down, liquidity, we're very close to a point in time when we're going to see that liquidity turn into that double whammy tightening. And then global liquidity is really going to be coming down. And if this move on the dollar, the US dollar, continues to become something, at that point in time, that's going to put further pressure on global liquidity and it's going to be headed down. So trying to time it and what happens next is very difficult. It's very difficult. Now, if you would have, for example, waited until something broke, in this case, we didn't take out the low. And I could very easily say if we did not run into a global lockdown situation, that likely Bitcoin would never have come down nearly as low as that anyway, right? That Bitcoin likely would have held somewhere about above $6,000, $7,000, $8,000, and likely, you know, it would have been smooth sailing. And I hope that happens going forward. I don't know that it's going to happen. The macro doesn't seem to be setting that up. The balance sheet right now is beginning to decline. Global liquidity is beginning to decline until we see some type of, let's say, event that would change that. An event that could change that could be something like that happened over here in 2019. An event that could change that could be something like China deciding that, whoa, this is not working out, that they're not able to get their economy to take off, and that it needs not only further easing, it needs a big injection. If any of those events happen, we need to make sure that we stay in front of it and on the right side. But right now, for the foreseeable future, we went from an uptick, and that was because of we pointed it out ahead of time. We talked about the extraordinary measures of the US Treasury, which will be counteracting quantitative tightening. And now ahead of time, we're talking about that coming to an end, right? So I guess what I'm trying to say is, Wes, I feel like to me, the most important part of the cycle, when I talk about the cycle, I'm going away from the Federal Reserve's tightening cycle, going from rate hikes to pauses to rate cuts down to zero, right? And I'm talking about the balance sheet end of it over here. If you were to follow the balance sheet, right, and you waited, over here, the balance sheet started reducing, and then you waited until 2019, it seems like a much more safer place to get into the market, right? Now, this is an anomaly. That type of anomaly could happen again. When we start seeing a massive, massive, let's say, current of easing taking place, that's the point in time when, if you're interested in meme type action or just rampant speculation, well, that's the time to be really speculating in the markets. Right now, I don't think this is the time to be speculating in the markets. I think it calls for a defensive posture. Now, what we could run into is a situation, though, where we don't see any type of credit event. It's possible that we run into some type of easing that keeps the market afloat. And then what happens is inflation begins kicking up. That's why it's so it's all right. So I'm going to have to rewind a lot here. It's an extraordinarily difficult question to answer, Wes and everyone. You know, whether or not smart money will begin to front run the liquidity, it's the timing of that is extremely difficult. Anyway, I'm just going to leave it at that for a second. We're going to come back to that a lot more on Monday because I think it's the most important thing to talk about. Do I think the debt ceiling is going to cause Bitcoin to go down? I think that the markets could be beginning here. We've looked at the dollar. Let's look at what's going on. The NASDAQ, it's still extremely healthy, right? NASDAQ over here continues one repair, two repair. And until and if we break down from this massive sell impulse, it looks extremely healthy. So we'll keep watching that. If we get a breakdown over here, Chio, do I think that Bitcoin is going to be following the currents of the overall markets? It looks like the markets are setting up for what could be a tough time ahead. And I think for since when was it? Since like the March, April, right? If I go to the YouTube channel and I go ahead and look with you really quick. So starting about 3 weeks ago, right? So starting about 3 weeks ago, this is when a lot of people we began preparing for the breakdowns a month ago. Talked about, as Bitcoin was above 30,000 the last time, or 29,000 the last time that happened, that there was pulling away from real yields and treasuries. It was wrong. People talking about alt season were like putting out the alert over about that. And our posture became a lot more cautious since then. And I think it's the right place to be. Now, this is coming from people that also, at the same time, if you go back 5 months ago, when Bitcoin was trading under $17,000, was talking about a coming bull market breakout. And then once it occurred, being on signal from the underbelly signals. And a lot of people at that time, it was the wrong side of the market for a lot of people. People didn't want to hear about it. And look, for me, this market that we're in is extraordinarily difficult. And I'm just trying to take it as it comes, Chio. I don't know what's going to happen. That's the honest truth. I don't know what's going to happen. I think it's extraordinarily difficult. And Ace, that's how I feel right now. If you hear there's no confidence in what the direction that we're heading in, I think it's been laid out in a very like methodical way over the past month, my concerns. And at the same time, and like all of you, I'm also not worried about it because I know that CTM 2.0 will keep me on the right side of the markets, right? And I guess there's no other way to go to say about than that. And we see that across, whether you're trading the daily time frame, the 8 hour, and we saw our FNGU just take another nice little win out of the market. A massive trade over here. This is coming off lots of small losses. 1%, 1%, 1%, 1%, nice 12% gain. Break even, small, small, small losses, bigger gains, bigger gains. And for the year, it's now up 100% in 2023. And you know what? That's just what it is simply being out there and executing and working on that execution. Now, it's not the same across the board. T triple G and S triple G, the inverse, it's just break even on the year, right? Break even on the year thus far. And Tesla over here doing a little bit better, up 20% on the year. And it's a good start to the year. There's no question about that. And I, I don't know. So we're not seeing, like right now, we're seeing the dollar enter a buy impulse. The dollar is trading over 100. It's very high, right? I don't know that we're seeing the devaluation of the dollar or what happens next. In the same way, in this area, we're ready to stay on the right side, and rightfully so. I even tweeted out to Santiago, to Brent. I said, Brent, as the dollar begins to top, will you let people know? Be like a massive respect out there if you're able to kind of like hold your thesis, but help people recognize when we're coming off, as over here that occurred in this area when we were super dollar bullish, but we called the breakdown, right? And it's the same thing happening over here. Like at this point in time, I know that a lot of people are thinking de-dollarization, the end of the dollar. Look, the dollar just entered that's a massively bullish candle that's happening right over there. And how long it lasts, that's another story. But right now we're not looking at the devaluation of the dollar. We're looking at the dollar at a historically strong level, right? And the dollar over here just entering a buy impulse. The last time we had a debt ceiling debacle was 2013, right? And once that was settled, if I had the date, it would be much better. I don't have the date it was settled. Could someone do a quick search and find out the exact date that the debt ceiling was settled in 2013. I think it's somewhere around over here. I'm not sure of the date. I would like to know the date, but man, let me pull up. October 17th. October 2013 over here, the dollar bottoms, right? It did, I mean, it went sideways, I should say, but upon the resolution, October 13th, the dollar rallied. It was a decent sized move upon the resolution. And, you know, I anyway. So May 19th, 2013, what were we got different dates over there. I don't know if Wiki is right or not. But I know that people like Stanley are expecting a massively weaker dollar. Um, I'm just going to stay on the right side. I think that serves us the best. I like to formulate what my ideas and our opinions are. Right now, I've gone from, let's say adopting off of the bottoms over here, a bullish posture. That bullish breakout remains intact. I just talked about at the beginning of the session where that would break down. It's that green line over here. And why it's happening, the bull market breakout is intact. But I am not convinced that we couldn't see something different happen this time. That chart does not look bullish to me whatsoever. And if this indeed was the beginning or the low of the bear market and the beginning, therefore, of the bull market, that's nothing, any type of 16% drawdown. And all the way down over here, it's completely acceptable. But I'm looking ahead and I'm seeing that we could see, you know, a lot of trouble ahead. Let's put it that way. I am not confident on the markets. I don't think this is a time that warrants any time of confidence. I think that we've gone from a place in 2022 where a lot of people really got it wrong as far as their expectations for thinking that the economy was whether in a recession or something was going to break. And a year later, I would say that my view is beginning to morph and change and saying now we're getting a lot closer. February 7th, 2000. Chris, thanks for looking that up. I like to know things exactly as they happened. February 2014 was the final resolution. And so you could see, okay, thank you, Chris. That makes a lot more sense to, I guess, what I had in my mind about what the dollar's reaction was. And is there a date? February 7th? So look at that. Upon the resolution, you could see that last swing low taken out. It's never easy. It's never easy. And the more comfortable you are with realizing that there's nothing easy about the markets and that they're never easy, the better prepared you're going to be able to navigate them well. But, let's like say this was very difficult to trade, in my opinion. A lot of people probably thought upon the resolution that we were getting to ready to roll over. I would imagine you're looking at a descending wedge, right? You're looking at that last wick being cut out. But really what happened was the dollar massively strengthened upon the resolution. So I don't know what's going to happen over here, but I do know that rather than just having some type of idea that we're going to see a massive breakdown and devaluation, the markets looks to be here to be consolidating. I would not be surprised if price were to go ahead and backtest into the trend line that I'm highlighting over here. That would be a very important area for me. I imagine as we got towards that level that a lot of people would be becoming perhaps ultra bullish on the dollar And as we come into it, I'm going to be watching the reaction off the resistance. And if we have a sell impulse, look to take it. At the same time, if this is faded really quickly where we are right now, the dollar, and we take out that red line on the downside, I'm able to flip back and say, well, that's the right side of the trade as soon as that breaks. But right now and today, this is the right side of the market to be on. Whether or not it has any follow through or not, you do not know. So Cardano here is the first one to attack on the short side. You can see that Ethereum, Bitcoin, both sidelined out of the market, and on the 8-hour time frame, Cardano has taken an entry to the short side, and that's the beautiful dance, right? I think that it was Fire who pointed it out earlier today, and he said, Bitcoin's coming off. I'm on the sidelines, but Cardano holding a short position. That right there is how we hedge and the beautiful dance. The daily looks different. The daily has Ethereum short the market and Cardano and Bitcoin on the sidelines. And look at this. On the daily time frame on Bitcoin, we are really close to entering a short trade. A lot closer than the long side. Interesting. It's very interesting. I think so. I think that there's a possibility of another 25 basis point hike. There's a possibility of a pause until the debt ceiling is resolved. There's a possibility of going from a pause to further hikes. Everything's on the table. When we say that these are unprecedented times, truly, I mean, like talking to you all shoulder to shoulder. I mean, you all are here. Most of you are part of CTM, and you all know that we've been on and continue to be on the right side. And we seem to be taking just a much more cautious approach about this. Stanley Druckenmiller is out there, and he's has the same attitude. He's like, I don't know, I'm really cautious right now. This market's difficult. And then you're out there and you see like people coming off as if they know what they have no idea though. And I think it's a really good posture. We're going to remain in this posture for a while. We'll remain in this posture until, we start seeing some type of easing take place. Do you remember what happened over here? Who were here was on CTM back during the lockdowns in March and April 2020. If you remember, almost all traditional macro analysts at this point were talking about revisiting the lows and an insolvency event and had no idea how to position. And we're like, this is massive Uber asset inflationary. You cannot even in April, you cannot even sell anymore. That's after riding this thing down all the way. And when the markets were crashing, indeed, because we have the meme, the markets are not crashing, but when they are crashing, being there. But that's the point in time, I believe, when if you want to get like really overly, I say it with like, understanding the word I'm saying, but reckless, like that's the time to be speculating when you have the headwinds going in your favor. That's not the situation that we're in right now. We don't have the headwinds going in our favor, or the winds at our back. We're actually moving into a lot of headwinds. So now is the time to actually be cautious, and that's a really smart place to be. And even if we were to see, for example, whether or not you're looking at the 8-hour or you're looking at the daily time frame, whether or not you're looking at, let's say it was a portfolio of 33% each. And let's say for this year that the return was positive and only 50%. That's a massively strong place to be in such a market until we get towards the next phase or whenever that phase comes. And instead of trying to front run the liquidity, and here's the answer, instead of trying to front run the liquidity, wait for the massive push. And when that massive push is happening, that's the point in time when we want to be making sure that we are riding it up a lot harder, a lot further. So, Chris, CTM, conquer the markets, conquering the markets, and there's a link in the description below. I don't know how it's worded as far as on the link. I think it says something like, you know, and when that massive push is happening, I don't know how to describe what CTM is when we want to be, right? It's a lot more than that, right? It is, but that's where you connect. CTM 2.0, that is the mechanical systems that we deploy in the markets. You can see on Bitcoin underperforms Cardano and Ethereum, right? And you could see, like, for example, this is Bitcoin over the last year, 50%, 17% drawdown, right? Adding in the last 2 years of time, and Bitcoin up 256%, 17% drawdown. And, you know, that's not bad going back now 3 years, you know, and this is all back tested. We've only developed this system, this collective collaboration launched in March 2022. It's been about 15 months now. And during that time, and specifically, mostly up until the summer of 2022, we made massive advancements. And it was not static until then. This is 2018 and 2017, 2016. Notice the drawdown the whole time. It's absolutely beautiful. And that massively underperforms something like Bitcoin, something like Ethereum or Cardano, right? This is all the way back to 2017. Ethereum, for perspective, the last 2 years, 2021, there's really nothing special about the price action on Ethereum. I don't think. And the return, or what about less than that? What about since 2022? The last 15 months. Ethereum here in 2023 lagging behind Bitcoin's performance. Bitcoin has been running hard. But again, we talked about if you could end the year up 50%, that's pretty solid. Cardano's lagging big time over here, down negative in 2023. All right, 2023. Cardano currently off 16% since 2023 has begun as it goes sideways. And when we talk about having, a portfolio and allocation of 33% to each, you never know which is going to run at which point in time. You could actually see it a lot better. Here's Cardano going back a couple of years. You could actually see it going back better if you look at it like this. I don't have the, I'll bring it up Monday, but looking at the high water mark and all account time highs, and they each take different turns when they are making their new all-time highs, and most of the time all three of them are actually going sideways. It looks like they're going up and to the right. That's not really the case. You have, let me just show you this one thing over here. It looks like the blue one here, this is the PNL. So it looks like it's going up and to the right, right? It's not, though. Most of the time, you see that green line there? Most of the time, it's going sideways in drawdown. That's really what's happening, right? Most of the time, it's going sideways. Here's Cardano. Look at these great lines. Right now, Cardano's been going sideways here since the last all-time high. I don't know if it's late December or early January. So about 4 months now. And it's quite normal. Look how many times Cardano has put in periods much, much longer than that. you know? All right, everyone. We got to come back to this conversation. Maybe I have to record it as a video. I think this is the most important question to be asked that West hit on over here. You know, does it become recognized that Bitcoin responds to liquidity? Would you expect it to front run the liquidity? And Bitcoin is not, I don't think so. Bitcoin is a reaction to the liquidity as it's occurring. If we see a credit crunch and the liquidity here really exiting the market, Bitcoin is not going to be immune in the future. Even if people think that the reaction is going to be, the Fed needs to come to the rescue. Upon that reaction, Bitcoin is going to bounce out there like a beach ball held on water. Do I think that if we have, first of all, this was a massive event. This was global lockdowns. Never know what's going to happen in the future, though. Bitcoin came off 62%. I'm reminded of gold in 2008. Gold came off 30%. During 2020, gold only came off 15%. Do I think going forward that Bitcoin has that type of reaction? I think so, but I don't know. We could say that we're seeing diminishing returns occur on Bitcoin, and not only diminishing returns, but diminishing volatility. And Bitcoin right now off 75% off its all-time high. Why in the previous two bear markets, Bitcoin came off 85%. And if the low is in, and we could say that. And by the way, I think that's temporary. I think at some point in the future, Bitcoin is going to enter the ultimate market opportunity, and we're going to see exponential returns, especially if you believe something like Greg Foss talks about, and that is like the implosion of the credit markets. If that's happening and you see a massive inflow of money into Bitcoin, you're not going to see diminishing returns or anything like that. But for now, that's the regime we're in. And, but Bitcoin could also take out this low. Anyway, that's where we are today. There is a ledge here, right? I don't know if that's what you're talking about, head snack, but if I look at Bitcoin like this, I know everyone's massively bullish on Bitcoin, and all I could say is that, well, we called the bull market breakout down over here, and everyone was massively bearish. And being that we called the breakout over here, I think we get to be the first, if it rolls over, to say that it failed. And if it fails, I want to make sure that we're on it. But this looks like it has the potential to roll over. If it does roll over and we take out this trend line over here, you can see it over here, it's probably not a good look. All right, everyone. Anything else we want to talk about on this Friday before heading in for the weekend? I would like to see if we could, over the weekend, get this up to 100 likes. I know we didn't come out smooth and sharp on this one, but that's not the point. See, the point is pushing through. The point is in trying to believe that you have the truth and trying to figure out just, going forward, the best decisions that you can make. I think that's where we're at. And I think that the markets in general are extraordinarily complicated. I really do. And I think to have the forward and continuing discussions we have, trying rather than to tell you that, like, for whatever reason, I think that this is going to be the outcome, rather try to take it as it comes. It was asked earlier today, right? Eraz just joined us, and he's wondering, he's like, well, why do you guys think that hedge funds have been unable to beat the S&P 500 consistently? Why CTM has been able to develop a system that outperforms everything I've seen before? And my response to that was, well, I think it's better receiving insight from the community. overall, my thoughts are I really don't know how to answer that. I've been in the markets for roughly 23 years, and CTM is using the foundation of a system I developed back in 2006 and 7, but the collective collaboration took it massively further than I ever would have had alone. I personally believe with all my heart, Providence plays a strong role, as I believe I understand the magnitude of the feat, right? And then Sale Guy pointing out a lot of things, and including that, well, these hedge funds, first of all, are largely participating in the public markets and in stocks, and it's a lot different than largely why we have solutions now, and as far as 2023, launching solutions in the stock market, especially on these leveraged ETFs. But Tesla's not using a leveraged ETF. It's it could. We also do trade it off of the 1.5 times ETF, but point being is that it's not really comparing apples to apples, as well as CTM 2.0 is just been trading since early 2022, and it does need more data to confirm the outperformance will happen 1 year, 3 years, and 5 years in a 10-year period of time. There's no question about that. Anyway, thanks for being here. I'm going to go talk to Moda Queen, get him back unblocked over here. So on Monday, he could continue to contribute. And thanks, Gio. Thanks for being here, everyone. I just got Bitcoin 26,300. Well, Chris, if this is the truth of the truth, and if you come back over here, Chris, and there's a couple of videos that were uploaded that they're only a couple of minutes long. This video is 6 minutes long, 5 minutes long. That's 4 weeks ago. These two, 3 days and 1 day ago. This is 6 minutes long, and this is 2 minutes long. And watch those videos, learn from them, and then continue. Chris, Chris, start there. I mean, before you get into a trade, as you will begin to see from just investing 10 minutes of your time, before getting into a trade, you know why you got into a trade, and most importantly, you know where you get out of the trade. Not on the upside, on the wrong, you know where you're wrong. And there's no way to know how much you're risking, what your position size is, without knowing where you're wrong first. So the first thing that you do before entering the trade is know where you're wrong on the trade. That's how you go ahead and you architect the trade. And then from there, you manage it. And manage it means you take what the market gives you. This is really important, right? Let's look on Ethereum. And how far back is this going? Far back enough. And I want you to see these list of trades. You ready? We have over here, I'm following the profit. The profit's in this category over here, and you see all the losses are going to be very small, and they're frequent. Like 6 or 7 out of every 10 trades are losses. And I want you to look at the gains, right? Here are the gains. Here are the gains, and look at the losses, and look at the gains, and look at the losses. And this is back in when Ethereum's moving in 2018. And look at this long streak of losses. 1, 2, 3, 4, 5, 6, 7, 8. Do you have the mental fortitude to keep your losses short, small, and to trade through that, right? And then over here, more series of gains. And then you don't get into these trades if you're cutting your profits short. Be more focused on your losses and where you're wrong, and look to get into them. Let's come back into some normal time right now. Ethereum's been having a hard time right now. It's not really going anywhere, right? Up 20% in the last 3 months. So 2022 was actually a great year for Ethereum. Look at all these gains back. 290%, but 2023, it's off to a slower start. So let's look at the slower start, right? And you can see over here, started off the year with a banger, 24%, and then small loss, small loss, small loss, small gain, By the way, this was 18% into profit and only took a 7% loss. This was 15% into profit and only took a 6% gain. Sorry, gain. If you were to be cutting your trade short and taking these profits here at 10, 15%, you never get to participate when these bigger gains will come. 52%, right? That was last summer, right? 40%, 50%. And if you want to grow your 92%, you don't get a 92% gain if you are taking 10 and 15% gains. It just doesn't happen. 65% gain. So the point I'm trying to make is that you need to be focused on where you're wrong, and you need to be focused on managing that trade. And just because you entered a trade, like that's likely not the trade that you wind up holding on and falls into massive profit. Everyone wants the trade that they just entered to fall into massive profit. But if you're trading successfully, what's likely happening is a very few, a minority of your trades are making up the majority of the profits. So you got to be able to make sure that you're not looking for each individual trade to make up those major gains, but you are just trading like a pro to get there. All right. Thanks for being here, everyone. So I'm kind of bearish on Cardano right now, and that's largely because CTM is short Cardano. But from a trader's perspective, right now you're seeing a lot of rookies out there speculating in meme coins. They're looking for what is the next Pepe, and instead of looking at Cardano, they're more likely looking at meme coins, and or Litecoin is coming into its halving this summer, and a lot of people like to play that play the altcoin market. So I think that there might be a little bit less attention towards Cardano right now. And if we are going to see some weakness, if we're going to see, and look, people like get confused. I not the people that are here every day and invest their time. It's very clear, but people following from afar get very confused, right? We were bullish on Bitcoin. We remember how we stayed neutral here, dived in on the way on the upside. But look, if this rolls over, at that point, I think Cardano is going to be leading to the downside. It's the weakest of the three. We saw it throughout all of 2022. Bitcoin and Ethereum traded both sides. Ethereum had one of its largest gains in the summer of 2022, right here, a 52% gain on the upside. That's after attacking on the downside. And then, but Cardano didn't do any of that. Cardano only took short trades in 2022. It was the weakest of the three. 2022, only short side. So if we're going to roll over, I expect Cardano is going to lead on that downside. And those are for the reasons why. Thank you so much, Emmanuel. And truly, those that invest their time each and every day, like their feedback means all the time so much to me. That's why when I receive like those that are there, that's really, I know we're doing well because you guys are pros. There it is right there. Noah, you heard that before. As you first got into the markets, people told you that. You read it somewhere and you probably were like, I just don't want to be wrong. I prefer to have a 90% win rate, and I'm just going to do it differently. Don't do it differently. Do it better. Be better than everyone else out there. And that's how you got to do it. You got to think like you're an elite athlete, and you got to perform on that level. That's why we have each other. There's no question about that. So why trade Cardano? Ethereum's an alt. We trade Ethereum. Ethereum is my favorite thing to trade. And I'm a Bitcoiner. I like to stack Bitcoin. Ethereum is the best way I know to stack Bitcoin. But look, we like throughout CTM, there are massive solutions on altcoins. And it's been pointed out how even with the massive returns Ethereum has put in and or Cardano, I mean, Bitcoin's returns are massive compared to any other barometer, but not compared to these things. Altcoins outperform, but altcoins are really illiquid. and there's a lot of slippage. And if we collectively attack them, it doesn't work because there's not enough volume there. So, why focus on that? Because I'm looking for consistency with the least amount of drawdown, right? That's what I'm looking for. And, that's a very small drawdown. It's very appropriate. Come back here and look at into 2017, and it's a very small drawdown. And if I wanted to be reckless, I don't know if it's reckless. Like, what would you rather do? Would you rather trade a meme coin? Like, I hope we could agree that there's nothing particularly special. Let me take after like when Ethereum peaked. Ethereum peaked in, let's say, in May of 2021. So by June. So there's nothing special about this time period I am picking out here. And if I wanted to speculate in meme coins, would I do that, or maybe use a little bit of leverage? And what happens if I was using 2.5 times leverage? The 30%, 33% drawdown. It's acceptable. If I'm really being reckless and speculating. And do I think that I'm going to get a more consistent return with an edge that is really well developed and refined, or just kind of like throwing darts at meme coins and whatnot? Pepe. I don't know what did I say. PP, Pepe, whatever. So that's what it's all about for us. But and more than that, like when you're dealing with these type of potential returns, nothing is a given by any means, shape, or form. And I like to look at Bitcoin because it's the underperformer. So let's look at Bitcoin during that same period we just looked at, right? And Bitcoin topped in April, but I'll go to June to make it a little bit fair. And like that's a good return to be compounding. That's over a 2-year period. Like, and if you could do that for the next 10 years, you are going to outperform. If you could do that, you're outperforming the best of the best. And there's no other way to put that. So instead of trying to take risks that wind up often ending messy, why don't you be more methodical about it? I often talked about that quote that people vastly overestimate what they could achieve in 2 years and drastically underestimate what they could achieve in 10. Play the long game. Play the long game and go for doing something that is extraordinary. Compounding money at this type of rate is absolutely insane. Go for it. All right, everyone. Thanks, David. Thank you very much. I really appreciate it. And I'm grateful to each and every one of you. Thanks on this Friday for everyone who chose to invest their time and to be here. I hope you learned something. And I hope for those that are always next to me, shoulder to shoulder, that the ongoing education continues, because it's just making us stronger and sharper. And I have no idea where we end up in 10 years. But I imagine it's going to be something quite special. And it is an honor and a pleasure to be a part of it with all of you. God bless you all, everyone. I'll see you all on Monday. I didn't mean to click on those, but here we go. Thanks, everyone. I'll talk to you later.